Hey guys, it's Matt here back from the Bull Call. And yes, it has been a while. But I want to get back into this, so let's talk about PayPal. PayPal is one of the biggest stocks that has been on a massive downtrend recently. And from COVID era till now, it is definitely down around 80%. Now, there's many factors that have played into this, but let's just start from the last earnings report. So in Q4 of 2023, PayPal had beat revenue, beat earnings per share, and they also beat total payment volume. All of these were expected to come in a little bit lower, and they were great beats. Now, the reason why the stock did drop a good from right about here on Wednesday, February 7th at 4 p.m. roughly, they announced earnings and it was okay and everything seemed great until this number right here of adjusted EPS actually came down. And that was from here in the guidance. You could see they said in line with the prior year. This meant that people assumed and the company assumed that there will be no growth within the next year. And that was very surprising and that caught the stock completely off guard, causing it to crash 11% within the next day. By the time the stock closed, it was down officially 11.47%, almost 11.5%. Now, this was detrimental because this was one of my biggest positions. And going into this day, and right up until this number, the stock shot up 10%. And then as soon as people started realizing that this number came in line with no growth, people immediately jumped out and were like, this stock is not for me. Now, since then, there also was listed here at least 5 billion in share repurchases, which is almost, when you look at the company, of a market cap of 62 billion, excuse me, they could almost buy up roughly like 8% of the company with the 5 billion right here. So, and that's at least 5 billion. They could always do more. So that means that they can buy back the almost 8% of the company, which is crazy that they just have that much money just to be able to buy back shares. Now, the reason why it says in line with prior year is because that they are going to start giving forecasts, not only just, they don't want to do full year anymore, they are trying to do just quarterly. Now, that is why it is interesting that they still gave a full year 2024 guidance, but that's why it was mostly just affect tax rate, free cash flow, and share repurchases. That's pretty much why they did that. Now, this was pretty unfortunate because obviously, like I said, that really dropped the stock, but it also creates a good buying opportunity because from the point of February 8th, the following day, till February 12th, only a few days ago, it rallied almost 8% because of people understanding that there's actually a lot of factors that play into this. Now, yes, they said that this is only going to be like basically in line with 5.10. That's pretty much what came in this year. I don't believe that that's actually the case. I just think that Alex Chriss, the new CEO of PayPal, wants to set the bar really low and he wants to completely shatter those expectations, and I think that's why he put them so low. Now, the other reason is that they also laid off 9% of their workforce. So that's already, he's already out there cutting costs, just like Meta back when Meta was, like $80 and everyone hated the stock. They were super into the metaverse. They started cutting costs and started focusing on the winning businesses, and that is exactly what Alex Chriss is starting to do right now. They are cutting costs, innovating, and they are pushing their way to more profitability. And I say that this number of 5.10 dollars per share of earnings is completely too low, and that this company will completely beat those numbers by the end of this year. And that is just Alex Chriss putting it there just so that people and companies, just so that he can look back and say that, look, I guided for this company to have barely any growth this year, and look how much I growed this company. Now, they're going to do this by, they unveiled 6 new features. I don't know if any of you have seen this yet. So they have new and improved PayPal checkout. Now, this is done because they want to compete where it just looks nicer. It has facial recognition, all that kind of stuff. It just they want a new and improved checkout. Now, this Fastlane by PayPal is a great way because almost it says 40 it can increase checkout speeds by 40%, and this is because roughly 50 or so carts get abandoned at right around checkout because people start overthinking it because it takes too long to check out. Now, this has happened to me many times until I see the PayPal button. I'm just sitting there, I'm like, oh, maybe I should buy this for my girlfriend or whatever. And I'm like, oh, now I have to get out of bed, go get my credit card, turn on the light so I actually can see the credit card, put the number in. It's a whole process that a lot of people are just like, all right, whatever. It's fine. But if you see the PayPal button, click, click, boom, pay, done. It's just like you're shopping on Amazon. So I feel like that this is a great tactic that they need to implement ASAP because this will create so much more payment, not even from people just like me, but just from anyone. Because if it's just a single code, you're putting your information, code, done. It is going to be so much better for companies just because of this little feature that is so similar to Amazon and why Amazon is so profitable, because all you have to do is just scroll down, add to cart, or buy now, and it is that fast and effective that Amazon has it like that. That PayPal needs to incorporate it with all of their businesses. I know it's very hard being on other businesses. It's not your own platform. You're not signed in. It's a whole nother beast that they have to tackle, and that's why that they're going to use codes and such that will make it just a little bit easier for you to start buying things. Now, there's some other things in here like AI powered smart receipts, which is really smart. Once you buy something like, oh, here, check out this, and it's all powered by AI, and so that they can figure out exactly what you should be targeted at, and so that can always, help grow not only PayPal but the businesses that are with PayPal. And a bunch of different ads and redesigns and all that kind of stuff. But the major thing for me is this fast lane by PayPal. I think that this is going to be a phenomenal feature that just really drives more and more sales for companies just like that are just using PayPal. And I think that this is a great investment for PayPal. So there's so many things that are going for PayPal, and I think that this 58.26 is just too low for PayPal, and I'm very excited to see the future. And that is why more than 80% of my portfolio, which is, I'm trying to divest because it has been doing pretty poorly, but I'm really confident. I think that this thing can finally break its downtrend and finally go higher. I'm looking at definitely almost $100 per share is my price target, but everything I said in this video is just what I have seen and what I'm thinking, and who knows what can happen in a year from now. So I hope that this is somewhat of entertainment, or can enlighten you on PayPal. And yeah, thank you for watching.